Hi, this is Rick Williams again, and I'm speaking to you about Energy Upgrade California. And the topic today is what is your best financing option? And this is part two, where we're going to evaluate what your loan to value is and what world of different financing options that'll open up for you. First of all, we need to review the job estimate and financing standard that we're utilizing, that being that an energy upgrade has an average cost of around $14,500, and we take away the utility rebate and the deposit, so we're coming up with a financed amount of $10,000. Now you remember the energy efficiency tax credit. That'll go away here at the end of 2010, but that cash for appliances rebate, that will stay on. So that's where we were coming up with this whole idea of the $6,000 on the table for this fall here in 2010. But let's get right back to that $10,000 amount, because we want to take a look at loan to value, what that loan to value percentage is and how we're going to calculate that. Well, first of all, we'll take an estimated value. So be it what you think your house is worth based upon recent sales in the area, that's what they're always judging. Or take a look at Zillow, and that can give you an idea. Not always the most accurate, but right now we're just trying to get an idea before it's costing us any money in terms of an appraisal. Then we determine what our first mortgage amount is. In this case, we're saying it's $350,000, and well, maybe the rate is around 6.5, or well, you determine that. Then we have our second mortgage. In this case, we're saying that it's $50,000. So when we add the two together, the 350 and the 50, we get up to a total mortgage balance of $400,000. So now this is where we get our calculation, because loan to value of 80% in this case would be B, the total mortgage balance, divided by the estimated value. Or we see it again here, 400,000, the total mortgage divided by 500,000 gives us an 80% loan to value. Well, so what's your LTV? So you've now probably gone through this and got an idea. Maybe you haven't. You'll have to look at the video again. But take a moment and calculate that, because this would give us the idea of whether we can go for a 30-year conventional, if it's less than 80%, or if it's a little bit higher, well, maybe we can take a look at a 2 or 3K rehab loan, or even an energy efficiency mortgage. So let's take a look at each of these opportunities one by one and investigate if this might be a good solution for you. First of all, the conventional cash out refi, if your loan to value is less than 80%, this is like the best situation going on, because the years we are at rates of the lowest in 50 years. So it's a standard 30-year conventional, and this can decrease both your mortgage cost and your energy cost together. Now, we do need income documented with W-2s and recent paychecks, and you'll pay for your appraisal up front. But with some good crafting here, you've got an option here to get a fantastic way to decrease both mortgage and energy costs. The next step is to take a look at the FHA 203K Streamline Renovation Loan. Pretty big, long name, but the whole idea is if you've got equity that's above 80%, but you're not underwater, and you want to refurb it a little bit, and you want to really provide that energy upgrade, you can refinance your property with little equity and provide that energy upgrade. Plus, you can do an energy upgrade combined with both bath work and kitchen work, or roofs, insulation, windows, flooring, even get new Energy Star refrigerators and stoves. Now, the beauty of all this is we take all these improvements, this up to $35,000 worth of improvements, and we include that in your 30-year first mortgage. And you only need 3.5% equity and a 660 credit score. And then a whole other topic is actually purchasing bank-owned properties or distressed properties and doing this renovation on it. So there's a lot of value here with what we call the FHA 203K. Another item is the energy efficiency mortgage, more commonly called the EEM. Here again, we can use it for purchase or for refinance. And we can add this into your 30-year fixed mortgage. Now we're limited to only to cost-effective energy solutions. So we can't add the extra little kitchen and bath work that we might want. But you can also combine it with the 203K for get some really serious rehabilitation opportunities. So here's another option. Notice this is costing us $59 a month per $10,000. So it spreads the cost out over quite a while. So the whole idea is we've taken a look at some of the better options there. But the whole idea is let's just stay warm this winter for less. And of course, you can always call the CPPCA or look them up on their website. And at all times, just remember that this is from Energy Upgrade California with your host, Rick Williams of Eco Energy Loans. Thank you.